Three of the most popular discount brokers out there is Charles Schwab, Vanguard, and Fidelity, and they all have their own flagship dividend-paying ETF. In this video, we're going to do a comparison of those three ETFs to see which one might be the best fit for your portfolio if you are looking for a dividend ETF. Okay, so first of all, we have Schwab's U.S. Dividend ETF, SCHD. It tracks the Dow Jones U.S. Dividend 100 Index. Vanguard's High Dividend Yield Index ETF, VYM, tracks the performance of the FTSE High Dividend Yield Index, and Fidelity's High Dividend ETF, FDVV. It tracks the Fidelity High Dividend Index. So in other words, its own index that it creates. Now, before we get into a comparison of the performance, we do need to understand the holdings of each one of these so we can understand why they perform the way they do. Okay, so first of all, Schwab's Dividend ETF, SCHD. Notice its largest holding, if we look at the top 10 holdings, is in Lockheed Martin, a defense contractor. You would think that might be a benefit this year. Then we have ConocoPhillips and we have Chevron in the top 5 holdings here. Okay, so notice that if we look at the sector weightings, over 21% is in energy. Then we have consumer defense and healthcare. But because of just looking at the top 10 holdings, we might assume this one's maybe been doing pretty well the last month or two, and that will be reflected when we look at the performance. Okay, now Vanguard's High Dividend Yield ETF, VYM. Okay, we have 19% if we look at the sector weightings in financial services and then technology and then healthcare. We have Broadcom, we have a bank, JP Morgan, we do have an oil company, Johnson & Johnson, Walmart. This one's a little bit more diversified. Now, if we look at Fidelity's ETF, FDVV, notice almost 25% of this is devoted to technology. And then we have financial services and consumer cyclicals. So we might think that over the last 5-10 years, okay, the major driver of the stock market recently in the last several years has been technology. So that kind of gives this one an advantage. In fact, look at the top 10 holdings. We have Nvidia, Apple, Microsoft, Broadcom, JP Morgan, and so forth. So notice this one's weighted heavily towards technology. Okay, so now let's look at the performance. First of all, these have been around for quite some time. The inception date of Schwab has been around since October of 2011, Vanguard since November of 2006, and Fidelity is a little bit newer. December of 2016 was its inception date. Assets under management. Schwab has $85 billion in it. Vanguard has $92 billion. Vanguard is quite small compared to these other two at only $9 billion, but it hasn't been around as long. Price per share, $31 per share for Schwab's, $150 for Vanguard's currently, and $57 for Fidelity's. And then the expense ratio, all of these are quite good. So an expense ratio, if we had $10,000 invested into Schwab's ETF, it would cost us about $6 a year in fees, and that's it. $4 a year in fees for Vanguard's, and Fidelity, it costs us about $15 a year in fees. Remember, they charge maybe a little bit more because they create their own index that they track. The beta, this is kind of a measure of volatility. A beta score of 1 means it's as volatile as the overall market, or that's usually represented by the S&P 500. If we see a beta score below 1, it means it's less volatile. In fact, this would say that Schwab's ETF, dividend-paying ETF, is about 35% less volatile than the market overall. Vanguard is about 26% less volatile, and Fidelity is about 20% less volatile. And here's the dividend yield, 3.3% for Schwab currently, 2.26% for Vanguard, and 2.77% for Fidelity, but the yield, the dividend yield is only part of the story. You should care also about your total return. The total return includes the dividend plus how much the stock has appreciated in value. So let's take a look at this. The year-to-date return, that's from January 1st of this year. to March 17th, okay, so we're just looking at less than the first 3 months of 2026. Schwab is already up 12.54%. Okay, remember it was devoted heavily towards energy companies and had some defense contractors. With what's going on in the world right now, that's quite a benefit to it. Vanguard is up 4.22%, and Fidelity is actually down just slightly. But remember, really technology has not been performing all that well this year so far, and that was its largest sector weighting. Now, a 1-year return, that's not 2025, that's starting from today and going back 1 year. Okay, Schwab has 15.72%. You can see Vanguard's is close to 19, and Fidelity is a little over 18. A 3-year return, okay, again, Vanguard and Fidelity are the best, and Fidelity has quite an advantage there. And the 5-year return, 11.03% for Schwab, 13.56% for Vanguard, and 15.68% for Fidelity. Now remember, Fidelity was geared more towards technology, and the last several years, technology has been the major driver of the stock market. But if we look at a 10-year return, things kind of balance out a little. Okay, Schwab is 13.35%. Now this isn't the total return, this is the annualized return or the compound annual growth rate. So the average over those years, okay. Vanguard is 12.44, and Fidelity, I got approximately 13.15 because it actually hasn't existed for the full 10 years. 9+ years, but not quite 10 years yet. So over its history, which is a little over 9+ years, that's what it has averaged per year. In 2022, that's kind of an interesting year to look at because the S&P 500 dropped 18%. The typical bond fund, which most people think is safe, okay, dropped 13%. But remember, these are much less volatile than the overall market. This one only dropped 3.23%. This one just dropped 0.46%, and Fidelity's dropped 4.19%. Again, we have the dividend yield here. Let me just take a moment to say, I really do hope you hit the like button. Don't forget to leave me some comments below. Okay, now, some of you might be thinking, well, maybe you like a couple of these. Maybe you already hold a couple of these. So let's take a look at the overlap by weight. Schwab and Vanguard's Dividend ETF has a 20% overlap by weight. Schwab and Fidelity only has a 14% overlap by weight. And Vanguard and Fidelity has a 34% overlap by weight. So if you want a little bit more exposure, let's say in your dividend ETF, exposure to technology, maybe Vanguard's the way to go. If you want the one that's less volatile and maybe a little higher yield and a little more devoted to energy and defense contractors, maybe Schwab is the way to go. Okay, but really all of these, if you're looking for a dividend paying ETF, all of these are very, very good. They're very, very popular. I hope you let me know which one you prefer or if you hold any of these in your portfolio. So thank you for watching, and I will see you next time.